Here we have Bitcoin, and now I am recording, so this is good. All right, beautiful. Anyways, today is the big thing to be watching tonight at daily closure, which is going to be 7 p.m. Eastern time. And we actually do have two-day regular bullish divergence to be available for the first time since quite some time, actually going all the way back to September, $40,000 lows way back on over here. Now, on top of that, we also are going to have a chance to take out the exponential and trade above it for the first time, quite literally since Bitcoin was pretty much at all-time highs, well above $60,000. So this is of significance and of relevance. And on top of that, that would imply that Bitcoin very likely gets another test, a very short-term continuation somewhere around your prior daily range highs, which is also in line with the 21 exponential average, which is just around $52,000 or so within the next 2 to 4 days or so upon confirmation of that. Of course, I always want to follow up on this signal as well, as we've been cautiously watching this one for it seems like weeks now, and realistically this is what you can kind of expect. A lot of the time when you're looking at these bigger signals on higher term timeframes, they take a long time to kind of come to fruition, and we're slowly watching it right here. And even with that in mind, it's still likely to take another at least another few weeks, probably even another month and a half before it even fires off in the way that I think a lot of people are looking for it to fire off. But basically what I'm talking about and following up on is a daily stochastic momentum signal that we've been looking at on CME specifically, and all of these signals, as denoted by the blue vertical bars right here, correlate to the same areas on this pane with tests down to the green horizontal bar right here, except all of them all 8 of them, except for like 3 of them, look about the same. And the 3 that I really want to focus down on are actually some of the most impressive ones. So first and foremost, why are these 3 of the same sort of regard? It essentially comes down to first a technical formation, which is an ascending triangle, which is essentially a reaccumulation, and also it's just showing that buyers getting more aggressive with higher lows. So we see that same thing over here in 2018 on the 3100 macro cycle low thus far, or I'm assuming we probably don't go below there, although hey, weird things have happened, I guess, in all sort of trading lands. Of course, the time after that was your flu dump from March 2020, way back on over here. And then, of course, a more recent one also baking into about an 8 or 9 month long ascending triangle, which does imply that the resolution of it, whether it be to the upside or the downside, but in this case, it would have a higher probability to the upside, is going to be, rather important. So first and foremost, I want to measure out this first move from this region, and then we'll actually go over the stochastic signal as well. But basically, upon breakage on that first one from 2018, you did get about an unabated run for about 120% before the next sort of legitimate consolidation. We actually did spend some time going sideways, and more importantly, actually gave a little bit of a threat of a reversal right there. And that was happening within the next 2 months upon validation above the top side of that ascending triangle. Same thing over here, actually, in March 2020 as well. You can see that first move up led to continuation, and you didn't get your next major dump until this area, or actually not really even that area. It's really back on over here on that retest of your all-time high, about another 150% move right there as well, which is rather interesting. And then, of course, what are we working on right here? One massive ascending triangle, presumably speaking, assuming that boo laws do take control. And if we do play it out, meaning that it does get validation with any sort of a daily or weekly closure above about $60,000 for a weekly, or $65,000 for a daily in this case, there is a measure move to be applied, and that's all the way up to $100,000, which, just doing some bad mental math right now, you can already visualize that 50,000 where we're at right now to about $100,000 is about 100% gainer right there, which is pretty much within the context of those historical signals for the first sort of few months upon validation of them. Now, going back into this pane over here, I want to highlight these 3 signals. Again, these are correlated to the exact same areas that we just spoke about, and they have very, 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 very similar sort of fractal relationships between the way that they're actually operating in the especially around this critical zone right here. So what I'm focusing on our more recent one is this first test rejection around the critical zone, comes back down, bases twice, reject, and then third time, that is the good one, presumably speaking. And by the way, we will be remaining with upside posturing on this signature, meaning that it continues to be active and within the realm of possibilities or likelihoods, I would say, as long as we're closing above 47,200 today on CME. Of course, the last time that we saw something relatively similar to this was back on over in March 2020. Same thing over here, bounce 1, reject, bounce 2, accepted, and of course that was never looking back for basically the rest of time, assuming that Bitcoin doesn't go back below $5,000. And then of course the one before that was the macro cycle low over here. This one a lot more akin to what we're working on right now, actually, as you get your first test reject, second test reject, third test accepted, and even still from that price point, as you can see, that was over here. It took all the way until March yeah, basically beginning of March and into April, where this one was actually resolved with a move to the upside. Same thing with this baby over here too. From this signal to the actual breakout did take about, that was March to basically May. Yeah, first day of May. So this one about a month and a half, 2 months. The other one about a couple months, or sorry, about 3 months actually. So somewhere within the realm of possibilities, kind of what we're looking at right there. And if we go back on over to our more recent one, you can see that same sort of fractal of a signal. The next sort of major thing that we really want to see it is getting above this last rejective high that we saw in early December, of course. But on top of that, you will notice that if we are working on one massive ascending triangle, well, we could kind of come up with a presumed date as to where you would expect this to be resolved. As typically speaking, these sort of formations do break, or they're most likely to break, statistically speaking, when they're about 70 to 75% full. And where would that be? Well, that would be around end of January, early February in this case. And that would be about a month or two from this date, or actually more like 2 months from this date, which is very much in line with what we've seen historically on the macro consolidation. So I thought that that was rather interesting. Again, that in line with all of the bullish divergence drives that we saw building up all the way to a daily, playing out on the short term, now building into the 2-day as well. And the 5-day, which just closed last night, is actually rather interesting here, as it does offer up the potential that Bitcoin does have its first etchings of a higher low at the area that we've been looking at for a long time now, that $47,000 to $48,000 region on a closing basis. Obviously, wicks below are fine. That's completely fine to have, but ultimately, we don't want to see any closures below this first wick low over here. Obviously, that would start to really call into question the long-term trend for the 5-day, weekly, and everything that matters for long-term direction. As long as Bitcoin's above there, we still have higher term timeframes up trends. Yes, the daily is still in a downtrend for right now. Yes, pretty much all timeframes up to a 5-day are in a downtrend right now, but the 5-day is the one that I'm actually focusing on because we just got a new closure last night. And on top of that, we will see a potential rejection of the bearish control zone right here. But even more important than that, if Bitcoin can put in a local low right here, if Bitcoin can actually put in a local low right here, then guess what? We would have hidden bullish divergences. We are making significantly lower lows on 5-day RSI, and you can see that price action is obviously or presumably making higher lows on top of that. So if that does get confirmed, which will be confirmed with any sort of a daily closure, I would say above about $52,000 would very likely do it for me. I think that that would be appropriate in this case. Then the technical target for a signal like that would be very likely back around your prior breakdown areas, which in this case is anywhere between about $57,000 to $59,000. Obviously, that area has slight implications for the very high term timeframes, as we spoke about earlier. A weekly closure above that $59,000 to $60,000 territory, and I look at this as, you know, back in a very strong posturing for long-term trend continuation. Obviously, again, as long as Bitcoin's essentially below there, I look at this as one massive consolidation as verified by the higher term timeframes volatility signatures over here, of which we do see the weekly and monthly still essentially contracting, which does imply that, again, this massive range that we've been in is one massive consolidation, which I think is rather obvious, whether you look at it from a volatility perspective, whether you look at it from a volume perspective with that declining from left to right, or whether you look at it from, well, basically anything that, or even like a pattern perspective as well. So all of that would imply long-term, very long-term, coming into like maybe, you know, as we said, February-ish, if you will, continuation, but still, you know, the waiting game does apply here. And this is all just potentials as we do, you know, mark off each and every little last checklist for what this, you know, or sorry, for what is required for to confirm this. And so far, so good. It offers up the potential for it. Again, what would invalidate this overall? Bitcoin coming back down below the last weekly higher low from September obviously would be rather nasty. I also want to follow up on this signal here as well. On the daily, we did see, or sorry, on the daily MACDs, the MACDs nuts over here, we do see it crossing back up with upside momentum for the last couple days. And it remains with upside momentum for, well, yet again another day, as long as we're above 42,750, which is good because we see that number actually slowly, or not slowly, it's actually like rapidly coming down. And in the last few days, we've seen that number. What I'm trying to say is the last few days, we've actually seen that number come down. So before it was like 47,000, and it came down to like 45 or 46 yesterday. Now it's down to like 42,750. So it's building momentum on top of it alongside daily volatility, which should be on the lows right now. So we are looking for expansion right there. If we can just get volatility perking up alongside momentum, which we already have on daily stochastic and MACD and RSI divergences, plus a trend reversal, which we are not going to have anytime soon, actually, to be fair. Even on a daily, Bitcoin doesn't take out its prior highs until we're back around $58,000 to $59,000. But obviously, you know, one thing before the next, and this is slowly building a nice, major, massive base around the 200 simple on the daily, which is kind of like, you know, your corrective areas that you look for in your long-term bullish markets, obviously. So with all of that in mind, do I want to give one more thing out? Oh yeah, we should probably talk about invalidations on the short-term timeframes right here. I haven't even spoken about the following channel that we've been working on, but basically it does look like it is resolved here. I don't mind any sort of moves back down to $48,000 base, but as long as Bitcoin is above $48,000, there is no invalidation. So that would imply on the other side, if Bitcoin does close below $48,000 on a 4 hour specifically, that would invalidate the short-term bullishness. Until then, we actually do have a measured move to be made out of the breakout that we saw from this falling channel, specifically on CME. Again, whatever I see on CME supersedes whatever the hell happens on spot price action. Spot price action was kind of showing up, well, more or less the same thing, to be fair, over time, but CME just more clean and clear, and realistically that just makes things easier, so why the fuck not use that? Anyways, that does have a measure move up to about 53,000 or 54,000 bucks, which is of relevance here because that obviously creates an avalanche of effects, not just keeping all of our momentum oscillators, pointed towards the north side, but that would be taking out this slew of lower highs right here, and we'd have, short-term, medium-term reversals confirmed upon that, and very likely does pull back from that region, but the pullback at that point, we'd be looking for higher lows on the daily, and then, well, hopefully the Bulas take control if you do want this market to be bullish from that region, obviously. So one thing before the next, we'll take it one step at a time, obviously. But before we leave off here, I just want to get through the lower term time frame momentum oscillators to see if they're on the same side. Just out of curiosity, I'm going over to 4 hour CME, and I want to see if that's on the same side as spot price action. Yes, they are. You see the 4 hour is pretty much coming in from the same angle, 49,450 to 49,300 is kind of the magical number for right now, and turning down below there. So do we get a little bit of a short term correction in the interim? It's looking likely, I would imagine. Let's go down to a 3 hour as well. Same thing over here, 49,100, the magical number right there. Buy hourly is going to be showing downside as long as below 49.3, and hourly is going to be actually up as long as above 48,850. So all lower term timeframes mostly on the same side of each other. Again, short term sideways consolidation is fine. Just don't want to see $48,000 taken out to the downside. Otherwise, I would be looking for another run around the lows and then come back to it after that. Do I think that that's what's happening? No, but that would be my criteria for that. Obviously, is need to be able to prepare for the worst, obviously. And by the way, the 2-day chart, which is going to have potential regular bullish divergence come off the lows for the first time since basically September at $40,000 last major low. Well, we are going to also have 2-day stochastic turning to the upside with any sort of a closure today above 48,100. And let me just double check. Yes, it is closing today on CME and should be spot action as well. Yeah, and both of them would be turning up basically above 47 for spot and for CME 48. So again, $48,000 coming in on multiple angles. That is a big pivot, at least in my mind, going onwards and forwards here for basically short, medium, and higher term timeframes. As long as Bitcoin's above there, I do look for this one to trade sideways in the short term and very likely try some upside, perhaps into the next, perhaps into the end of the week for a bit of a Santa rally. Oh man, it's a fucking Santa rally time, huh? Anyways, we'll just briefly check out the underlying market dynamics over here. We've been following up on this for like the last, for forever basically, but I want to put all of this into context, obviously, because again, if you've been tuning into these videos for the last 3 weeks, I hope that I've been as consistent as possible with talking about this, even though it's been very slow and in some ways, boring, especially for people who are breakout traders and looking for the big bad moves. These consolidation ranges of, even $5,000 can be boring for some people. For me, this is amazing, but fair enough. My point is I want to be building this case so that you can see over time how these things start to evolve, and you can follow up on it, and then you can do it for yourself, and then you don't need me, and you can say, Crown, go fuck yourself, sir. I hate you. And fair enough, man. Maybe I should hate myself too. Anyways, fear and greed index over here, 27 reads. So we've still been within the fearful zone, even with Bitcoin getting a bit of a short-term time frame breakout here. Again, this is significantly longer now, 50% longer, or more than 50% longer than what we saw on the last $40,000 low from September, where Bitcoin spent about 2 weeks in the fearful zone. And then, of course, the time before that has outdone this was the last macro low at 30,000 bucks, where Bitcoin spent about 2 to 2.5 months in the fearful zone before getting that move up. So again, we're looking for lows within this region. Now, there is one sombering detail about all of this that I think is certainly worth knowing, and I don't necessarily know how to fit it into the picture just yet, but it perhaps is a big cautionary signal. So I want everyone to have, as full information as possible, or at least in the best way I can give it, which hopefully I can do my best job of expressing myself here, which sometimes I'm not so great at, but fair enough. I'm trying my hardest right now. Something I'm really trying to work on, but basically we have a very interesting relationship between open interest, leverage ratios, and funny rates right now. So funny rates are still a little bit below parity. They are in no way, shape, or form, concerning right now. However, they are a little bit positive, but below the 0.01, parity level is kind of what I think of that as. That's like what you expect just as a going rate, neither bullish nor bearish, just neutral as all hell. And within the context of a current downtrend, you kind of do want to see it negative, to be fair, in order to look for like major reversals. We did get that on December 4th, however, but more importantly, it's been trending down for a long time now. So I go with that. And that does suggest that shorts have been more aggressive within the last month and a half now, essentially. Now, here's the weird thing, though. The open interest has been ticking up significantly from yesterday to today. We added about $1.5 billion with a B leveraged positions, and the leverage ratio is literally at new all-time highs. We've never even seen it higher than this at all, ever. So the question is, who is going to be caught offsides on this next massive liquidation event? Because it's very likely coming from here, and that is, well, hopefully going to be for the BULAs, the shorts. Again, as the funding rates, the financing would kind of suggest that they're a little bit more aggressive here. But realistically, here's the thing. When it comes down to it, price action matters more than anything else. And where do the shorts really start to come into major issues if they're, medium and higher term time frame traders? Back above about 51,750. This last high right here from our current range. Above there, shorts will very likely will have to cover or get liquidated. And on the other side, where do longs start to run into issues right here? Well, they're probably basing around $48,000. I think at maximum $47,000 would kind of be the area. So those would be the two major precipices on price action that I'd be paying attention to, because you're very likely going to see major liquidations or major covering from those areas going onwards and forwards. And I'll actually be able to prove that soon enough as I'm working with Bookmap to bring that essentially live to the streams here. All right, cool. So there you go for Bitcoin. Hopefully that was helpful and nice.